And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Wednesday, February the 16th. Welcome to the Market Forecast. I'm John Hoagland. Thanks for trusting me with your time. We've got actually a lot of information coming out today. As always, it is going to be a challenge to put accurate context over the market. We're always focusing on risk management and trying to remain patient in our trading. If you're already in the markets this morning, hopefully things have been going your way. Trading overnight, hopefully you had a good night. As far as economic numbers this morning, 7:30, the retail sales numbers came out and import-export prices came out. All of them higher than expected. Now, is that good that we're still spending money in retail? Or is it the fact that we're spending more money on less retail that has created this higher response this morning? Import-export numbers, as we could expect, would all be higher. Markets seem a little bit muted as to their response to these numbers this morning, but we're still waiting for a lot more. 8:15 this morning, industrial production, 9 o'clock business inventories and housing market index. For you crude traders, 9:30, of course, the EIA petroleum status report, and of course, 1 o'clock, they'll be releasing the minutes of the recent FOMC meeting 2 weeks ago. So we're still looking for new information. There's still plenty of headline risk out there. U.S. stock index futures have kind of remained cautious overnight as well as into the beginning of the morning here. Still, a question as to whether Russia is really pulling back. Apparently that's done little to quell the worries in the markets here just yet. But we're always praying and hopeful that there's going to be a peaceful resolution. There will be much to digest today in economic numbers throughout the session today, as we've already noted. Earnings later on, NVIDIA and Cisco, the biggest ones, the early releases here this morning, overwhelmingly positive, it looks like. Inflation is raging in the UK. According to their PPI and CPI numbers last night, Canada's CPI numbers came out just as our numbers came out at 7:30 this morning. Of course, all of them higher. Inflation is everywhere. Crude prices remain firm after a 1 million barrel draw announced by the API last night. EIA is expecting a 1.5 million barrel draw. So still a lot of questions as to demand and supply always in question. We're going to see those charts here very shortly. As always, make sure that you hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here at the Market Forecast. Of course, thank you for subscribing to our YouTube channel. We recently hit 15,000 subscribers, so thanks to all of you for that. Today is Wednesday. We are going to be having our group coaching here at 1 o'clock, just as the FOMC minutes come out. But we will see some fireworks as we get into the group coaching session. I've put the link in to join coaching today in the chat room there, and I look forward to seeing all of you there. Any questions I can answer, I'll answer. Nobody knows everything, of course. I certainly don't, and one of the things I love about that is I probably learn more than you do in those sessions. All right, taking a brief look at the VIX, the dollar index, and the yield on the 10-year VIX, about flat, 25.69. Dollar index off slightly from the close yesterday at 91, and the yield in the 10-year pretty much steady at 2.03%, holding above that 2% level. Got to say good morning to everyone as usual. And we've got Denny. First one in the room, you win the prize. Good morning, Ronald, Manuel Caesar, Spencer, good morning. Brian, Zerain, Jay, Mr. Fox, Drew, good morning. Terry, Scott saw and he conquered. It's good to see you this morning. David, Francis, Theo, was always a pleasure to see you. Mirik, Jeffrey, Isaac, my brother, good morning. Robert Kennedy, good to see you. Bobby, Vince, my guy, good morning. Alfred, Jeff, Sarah, always a fine dawn for you, I hope. Wen, good morning. Jimmy N, good morning. Second day green in the combine. Just look for the next good trade, Jimmy. Always start each day from zero. Galen, good morning. Bill, Laura, McLaren, don't think I've seen you for a while. It's good to see you again. Jerry is awake. And hopefully John is too. Nicholas, good morning. Kirill, Jeffrey Crockett made 600 and realized I was in the practice. Yeah, that happens. Spencer, yeah, better than losing 600 and realizing you did it in your combine. Of course. Mr. Presto, good morning. Frederico, Lacey, easy now, girl. Easy. I know. There's dogs out there, and you're not out there. I know. I'm sorry. We're a little busy right now. Lacey says, good morning, everyone. Mr. Presto, Frederico, 3 lines inside. Janus, Shaw, good morning. Robert, Francis, Andre, Sarah, hearts to you as always. Rusty golfer. That's me. I am a rusty golfer. Jimmy N, you're welcome. Lacey, easy girl. Easy girl. No, girl, no. Oh, I know. They're out there and you're not. You're out there a lot. You're out there, I know. Jimmy, she's a rescue, and we had a trainer that swears up and down that she's a Belgian Malinois. We thought she was just a German Shepherd. You can probably mixed with something else. She's mostly black, and yeah, Mr. Fox, your 3 dogs are looking puzzled. That happens a lot. She's a little upset there when dogs are walking by in front of the house, and we live next door to a school, so there's a lot of folks walking their kids to school with their dogs, and just about the same day, just about the same time every day as we are getting into the forecast, they're walking by with their dogs. So she's taking a drink of water and cooling off a little bit. She's going to be fine. And tell Max that Lacey says hello again. Yeah, part wolf. It's almost like living with an 85-pound velociraptor sometimes. She is very sweet, very smart, and just doesn't always have manners. That's the breaks. You want to see her? Come here. Here's Lacey. Hi, girl. I know. We'll get you out there soon. We'll get you out there. Okay. You got to get down there. We got a business. We got to take care of business here, okay? We're going to take care of business. All right. Let's jump into the charts. Let's see what's going on this morning. Let me get set up. And we'll be off. All right. So here is she's a pretty girl. Yeah, good bark on them too. Yeah, I'm not breaking into this house, that's for sure. All right. So here's the S&P's daily chart. Open interest supports the short covering we were expecting from yesterday's session. Now, remember, we had some pretty decent open interest pushing the market lower in expectations of actually, a lot of traders thinking that there were going to be some hostilities overseas. The fact that some of that has eased, of course, we trapped a whole bunch of shorts down here. Losing 1,500 only in open interest doesn't seem like that much for the amount of traders that I believe were trapped short down there. So maybe a little bit of opposing opportunities yesterday. Volume was pretty low. So, that's a lot of folks probably just evening up or positioning for any kind of headline news that might come up. When we look at where we are now, we're pretty almost centrally located between last week's high and low, weekly kickoff high and low. Our tennis player is kind of sitting here waiting for when the next volley is going to be. Is it higher? Is it lower? It wants to be ready for that. Headline risks, of course, still remain. There's a lot of information to digest still, so that when we look at the 30-minute chart, we don't really have any overnight inventory. Finally, we appear to be getting some response to the inflationary numbers that have already come out. It's a little bit delayed, if you ask me. But it's, the market is still in the range from yesterday, a very small range. Again, we did kind of put up a P-shaped profile, which also supports the fact that we had some short covering yesterday, and that's what's kind of what was expected. Just a much smaller range. Yesterday, we finally put in some of the repair that we thought was needed here on Friday. The market is probably likely to go searching for different levels now to facilitate trade. That's the market's job. Settlement 44.6450. Put that on your charts. When the market opened here, it just left that area, so there's no real overnight inventory with which to look for. You're going to suggest trying to stay patient today, particularly if we don't open with any kind of gap higher or lower. We open in range, be patient, look for better trade locations. There's still some potential repair that we may be looking to take care of from Friday's session still, even with all this information coming out. It's going to be a tough read today. It always is when there is a ton of information, particularly if some of that information is contrary to some of the other information. Waiting for industrial production, that shouldn't be contrary to anything. Business inventories, housing market index may be, a little bit indicative of a inflationary or other types of situations. I'm very interested to see how that housing market index comes out. And then, of course, we've got the FOMC minutes. A lot of folks may be waiting for that before, putting any new positions on. So almost a little bit of a hurry up and wait type of situation here. Taking a look back to the daily chart here, we are kind of positioned centrally located in range and in a kind of a area of balance. We've had our area of balance here. We had our area of balance here. We just kind of tying those together now. So our extremes are going to be up here, and our extremes are really going to be, I think, weekly kickoff low. But we also have another extreme down here in these swing lows. Context is difficult today. So stay patient. Better trade locations may come as the day goes on. Again, particularly if we open in range and even in value. We start to open with a gap that's going to open up the opening range trade, possibly. Opening range trade has been a real bear until it works. Markets have been very choppy on the opens. Let's take a look at crude oil now. We're coming into the open, so let's take a look at the daily here. Upside structure certainly remains. I mean, you could put channel lines, or as we call them here, Daniel lines, and just follow this thing, straight up at almost a 45-degree angle. The structure still remains. We are in rollover. Probably tomorrow morning, we're going to be switching to the April contract, as volume should be moving over from March to April. it does make things blurry as far as volume and open interest are concerned. We held up volume pretty well yesterday as the 2 days before the roll. We lost 9,300 in open interest. Is that directional, or is that directly related to rollover, which is always the question? We are in a let's call it a 3-day area of balance, and that does tend to happen during rollover. And if something changes, if there's an OPEC thing, or if the EIA comes out wacky, that could change that. But I think our longer time frame traders are finding comfort in the fact that we're in range for the last 3 days, which allows them to focus more on getting a cheap rollover. All right, that said, we've got our 30-minute, our settlement 9207 range-ish. Okay, we're back up in the value from yesterday, but we are opening with a gap. Okay, we've got the first minute over. Let's see what the opening range is telling us. Yesterday, we had a pretty decent opportunity off the opening range. So far, the opening range remains unextended. Here's our opening range, 93.48 to 93.75. It's been some pretty big opening ranges lately. That looks like about 28 ticks. We haven't left the opening range. If we're going to be thinking about gap rules, okay, because we do have a gap here. If we can't close the gap relatively early, we're going to look for opportunities to trade in the direction of the gap, which would lead us perhaps to another test of $95. God, I hope it's not $9,500. My goodness. But again, we are still waiting for information. We've got the EIA at 9:30. Opportunities may be a little bit muted, so I'm going to try and stay patient. I don't, necessarily know if the opening range is going to be a good opportunity or not for us today. We're certainly spending a lot of time. This is the 3rd minute inside the opening range. That doesn't instill a lot of confidence. Stay patient. Let's look at the Nasdaq now. Hello, Mr. Shine. All right. Very similar situation, of course. I mean, we are 15% off the high. The S&Ps are 10% off the high. Yesterday, we dropped 3,300 in open interest, much more than the S&P on a thinner product. We really trapped a lot of shorts over the last couple of days before yesterday in the Nasdaq. We suspected there were some trap shorts there. There certainly was. Now, again, we have price relatively central to range. Last week's high and low, the weekly kickoff high and low. The market is preparing for anything, and we have to be prepared for anything. Much data to digest, which may mute opportunities for us, may increase opportunities for us, and it's one of the things that makes putting context over this so difficult. We're in a medium time frame area of balance. The extremes are basically put right on this chart. In the middle of it, we're looking at short time frame control. Short time frame levels may be respected, and there's a lot of them. Okay, we've got the market opening in range and in value. Settlement 14,609.50. The market opened last night here. It just left that area now. Any inventory is brand new. We're pushed back into range and back into value. Patience. The perception of value from last night, from yesterday to this morning, hasn't changed much. Try and stay patient. This close yesterday in the Nasdaq is actually a bit of a late spike, and we did close right at the high. Where we're opening now would be a rejection of higher pricing. But with all the information we have due out today, it's going to be a tough trading day. They're always tough. Seems like the markets have been a little tougher these days, and I think in large part it's because since the beginning of the year, it's been a market state change. We've been overall just kind of grinding higher. We balanced up here, okay, the beginning of the year, right about here, things changed. We had a pullback. We're now range bound as part of that pullback. I think it's been a tougher beginning of the year because we get so used to looking for patterns that work for such a long time on the way up. The patterns change, and we have to adjust to that, and it makes things a little bit more difficult. As humans, we try and go back to using the same things over and over again that may have been working in the past, and when the market changes, some of those things aren't going to be fruitful for us at times. And we have to make adjustments to the current market situation, and it's not easy. A lot of traders get their gears stripped, and we don't want to do that. Remember, the most important thing is about risk management and being able to be here tomorrow. If you've been having a rough time, then step back a little bit. Don't get more aggressive. Take a look back and see, some of the things that you've been doing and how you may have been able to create a better outcome in those situations just by being an archaeologist or a forensic trader. Look back and say, okay, I remembered I did this. Was there something I missed? Could I have created a better outcome in this situation had I noticed something that I can see now? Looking forward into looking at those situations, you may be able to create new patterns that your brain is used to and may be more successful for you than some of the patterns that you had been using before. And we're going to use those patterns until they kind of prove wrong again, and we just got to take another look and develop new patterns. It sounds easy. It's nowhere near as easy as it sounds. So another look at the 30-minute here, in range, in value. One thing that doesn't change is my suggestion to stay patient when we open in value. Doesn't mean it's always going to work. Doesn't mean it's always going to provide an opportunity. Sometimes the best trade location might happen early, even if we open in range and in value. It's just a probability. We're always working our hypotheses and our probabilities. Let's take a look at gold now. One second. Okay. So yesterday we had some long liquidation on pretty decent volume. We've been holding up some pretty good volume here. Long liquidation supported by open interest loss. We lost 1,100 in open interest. Not a huge number, but still indicating that some of our recent longs got spooked yesterday. Volume remains really strong. Are we kind of sitting here in an area of balance? Well, for 3 days now, we could start to call this a balance. And I think we're waiting for new information. Did we get some of that information already this morning in some, more inflationary numbers? We may have. Take a look at the 30. So initially, the opening range was the low of the session. I can't really see if that is the case now. But those numbers, have taken our equities off their highs. they've taken gold back to their highs so far this morning. We opened largely in range and in value. We are attempting to reject yesterday's range and value. If you remember on the recap yesterday, we talked about the fact that this was a normal trading day. The initial balance, or the first hour of range, remained the extremes for the entire session. That doesn't happen that often. And what sometimes does happen because of that is the ability for the market to facilitate trade. It gets used up there. So after a normal trading day in a more volatile market like gold, there's, I think, a higher probability of a directional day away from this once it creates than the probability of remaining in range. We can remain in range forever if the market does so, but it's going to just kill volume. It's going to kill the interest in that market. So the market's job to facilitate trade. It facilitated a lot of trade in this zone yesterday. It's going to go looking for new areas to facilitate trade. If it accepts above, continuation. If we come back in range, if we take a look down below and accept, continuation to the downside. It's kind of vague, but that's what we have here. Is vague, is ambiguity. It's our job to look at that ambiguity, to look at what we see, and to hypothesize possibilities. And when one of those hypotheses comes true, we trade to that hypothesis. It's all part of trying to accurately find context and then put a strategy into that context. Euro, we were killing volume again. We had a spike in volume here, and now we're killing it again. Because why? We're in this area of long period of consolidation in the daytime frame, over a month in that consolidation. We're back in it. Yesterday, kind of a surprise on lower volume. We added 2,600 in open interest. I find that to be very interesting. But again, that open interest only brought price back to the central location between weekly kickoff high and weekly kickoff low. Our tennis player is waiting for new information. Take a look at the 30, see if that helps us. With short time frame control, remember, short time frame control. Overnight high, overnight low, value low from yesterday. We take that out. We've got a naked point of control down here, with which I could have put my line on there. We also have another naked point of control up here. There's lots of visuals for the short time frame traders to be looking for opportunities. Where are we now? We're back at settlement. We're back inside range, and we're back inside value from yesterday. There's very little change in the perception of value. Try and stay patient. Take a look, some of these shorter time frame levels, which we just talked about, our overnight high, our overnight low, easy extremes from the overnight trade. I'm certainly going to try and stay patient here. Yesterday, this market was just an enigma to me. I didn't have a feel for it. I'm sort of feeling that same way today. Let's see here. We've got the 10-year. Oh, sorry, Lacey. Lacey's over here moosing me to pet her, so I just bumped her head on the chair. Poor thing. So the 10-year dragging along weekly kickoff low, putting in lower highs. How long is it going to take for buyers to exhaust at this level? Or are sellers going to exhaust and end up getting stuck short? With the knowledge that rates are going higher with relative certainty, I don't see that our shorts are that worried about it, which might create just the fear that they're looking at, that they may be fearing. 10-year, 30-minute. Well, our 10-year, a little spike off of our early numbers here. Industrial production just came out. Let's see what that looks like. Trying to bring that up here. Hang on. Okay. Industrial production. Month over month in January, 1.4. They were looking for 0.4%. Manufacturing production month over month in January, they were looking for 0.3, came out 0.2. Still looking for one of those numbers to pop up here. Anyways, let's get through the next couple of products here. So my focus is really anytime we get an opportunity near last week's low, weekly kickoff low, that's where I'm going to really be focusing bigger opportunities. We start to come back into this 3-4 day range. We've got plenty of visual targets, shorter time frame targets with which to look at. Value highs, range highs, balance high. Too much. And the nat gas. So a big, decent volume yesterday and a big boost in open interest, adding 7,500 in open interest. We know we have a island low here that is a reversal pattern that can create big opportunities, and it appears to be doing just that. Upside auction looking relatively healthy and relatively new. This is a market that can certainly become ballistic in the right opportunity, in the right situation. Here's the 30-minute chart. So yesterday, adding 7,500, settlement $4.30. And we've got a pretty decent gap to the upside today through a previous gap. We're going to be, probably testing back up to this visual, this naked point of control. We've got a gap here. If we can't close the gap relatively early, what's that tell us? The opportunity is to the upside. We've got a little bit of a pullback here. You may need to respond to this day, to this market a little bit quicker this morning. It's going to be a challenge. It is always a challenge. Markets are a challenge. Right. Well, it is Wednesday. We're halfway through the week, and it's been it's been an interesting and challenging week as always. Yeah, Spencer, huge beat in the U.S. Industrial production. Euro broke a 3-day rising trend line on the retail sales numbers this morning. Thanks for pointing that out for us, Spencer. And all right, well, we're going to call this a forecast. I'm going to take my deep breath. Stay humble, grateful, and creative. I'm going to be good to myself, good to others. I'm going to say a prayer for world peace. I'm going to hope for a positive trading day for all of you. That's our goal here, is we want to really are focusing on your success, and we look forward to that. Have a great trading day. I'm going to meet you in the proverbial trading pit in about 5 minutes here. Get out there and profit today. Start from zero. Take your time. Be patient. Sometimes the better opportunities are the ones that we don't go looking for, the ones that come and find us. So let some of those opportunities find you today. Trade well, and we'll see you 1 o'clock for the group coaching, and then again 3 o'clock for the recap to see what we talked about this morning and see how things played out. Have a great day.